Hey, Zach McDonald, your real estate agent with Real Property Associates, and I've got Dan Keller with me here, branch manager of Cross Country Mortgage in Edmonds. He's also like one of the best loan officers in the whole state. Maybe he wanted me to say country too, so one of the best in the country.
Well, I mean, top 200.
Top 200.
Out of 70,000.
That's pretty good. Anyways, we're here to talk a little bit about mortgage rates, refinancing. We've had a lot of questions recently. At least I have. I know Dan has, but I'm even getting questions like, Zach, should I refinance right now? What's happening with rates? Why are they low? So we've got Dan Keller here. We're going to talk a little bit about this. So Dan, first question is, why are mortgage rates dropping? What's going on?
Yeah, I mean, there's a lot of things that are contributing to rates dropping right now. I think if you were just to look at the media or look at social media or the news, you're going to hear a lot about China and the U.S. and the trade and tariff talks. Okay, So you have to understand what really impacts mortgage rates, and most of the time, it's a catastrophic type event, whether it be economically speaking or unfortunately like a tsunami or an earthquake. And so what we're feeling right now is the pressure from global news. Okay, has nothing to do with the economy here in the U.S. The economy here in the U.S. is good, but you have to understand on Wall Street, investors put their money in stocks and they put their money in bonds. It's really the two avenues. And when investors feel pressure from fear or uncertainty, what they'll do is they'll pull money out of stocks and they'll put them into bonds. And when they do that, it helps increase the price of mortgage bonds. Mortgage-backed securities improve, and guess what? Rates drop. So that's kind of where we're at right now. But I think what's really important to understand and to not be mistaken by what you read and what you see on social media and in the news. See, a lot of I made a blog post the other day for my clients, and it said, at 12 years in the mortgage industry, this is the first time in my entire career where I feel like my clients are more confused than ever. Because information travels so fast now, but there's no regulation on the information.
What are people getting confused with right now?
So, I mean, I got a call the other day, and I'm getting multiple calls, texts, and emails saying, "Hey Dan, I know you just did my mortgage a year ago, and I got a really great rate, and it was like 4.5 or 4.25, but I heard interest rates dropped 2%." And that is,
did they drop to 2%?
And I didn't laugh at that person because I can't, because what they're reading is the 30-year Treasury, which is right around 2%. But what marketers are doing and some non-professional mortgage people are doing is they're using the Fed funds rate that has nothing to do with mortgage rates at 2.25%. They're using the 30-year Treasury. They're using the 10-year T-bill that's at 1.7, 1.5% right now. And they're trying to attach that to the mortgage market, and it's just not accurate. So don't pay attention. Now, those factors that I just mentioned are indirectly related to mortgage rates. But 30-year fixed rate mortgages right now, Zach, they're in the, depending on your credit score and your down payment and type of property purchased, or if you're refinancing your financial situation, probably in the middle to upper threes, which is low. Historically low, but definitely not at the 2% range. I mean, if that happens, we might as well all throw in the towel, because that's going to be the least of our concerns is mortgage rates dropping. It's like the Great Depression if that ever happens. So just be cautious what you listen, what you read, and this is my message today would be lean on guys like Zach, lean on professionals like myself to give you updated and accurate information on that.
Yeah. Do we need to like slip in your MLO number?
Yeah, we do, because I did talk about some financial market type stuff. I'm a mortgage professional, mortgage advisor, and branch manager here at Cross Country Mortgage, and my MLO number is 115349.
So another thing I wanted to ask about was the refinancing situation. So I'm getting a lot of calls from lenders because I have a home and they want to...
Who did your mortgage?
You did.
Oh, I did. Okay.
Yeah, but you were with New American Funding at the time. Yeah, so I now have been assigned a New American Funding loan officer.
Yep.
I've had a couple different ones call me right after my loan was sold. I don't know if that's okay. You sell somebody's loan and then you start calling it back.
It's a free market, baby.
Okay, it's
but
a
at
free
the end of the
market,
day,
baby.
you're my client, and I got you.
Yeah.
I got you on the rate tracker.
Yeah,
so you have a really good rate. So that's why I'm not blowing you up right now to refinance.
Yeah, so at what point does it make sense to get a refinance right now versus waiting?
Yeah, really great question. So I kind of have a general rule of thumb in my business. and then the reason why I haven't called you and Christina to say, hey, I think we should sit down and talk about refinancing is because where you're at right now, you have a great 30-year fixed, and where the rates are at right now for other 30-year fixed rates, there's not a delta of at least a half a percentage point, all right? So I like to be able to save my clients approximately $200 or more a month, or about a half a percentage point before we start having that conversation. Now, I do believe that we'll be there. So that's why you've received a couple of messages from me saying, hey, I'm on the market. And I think we have better days coming. I do believe this. So I think this is a great update too, to say, hey, don't overreact right now and go out and refinance without fully understanding what you're doing and where the market's heading. I believe we're going to trend sideways for a while.
Okay.
And I think based on the 10-year, based on the 30-year, you're hearing a lot about the inverted yield curve and stuff right now, which I don't think is going to play a big role. The Fed. So you have to understand right now what we're doing right now with China. China's devalued their dollar, which is the yen, right? We are in the process of devaluing our dollar. If that continues to happen, other variables are going to come into play that will cause mortgage rates to drop a little bit more. Not a ton, but a little bit more. So I think the best opportunity is right now and in the coming probably 4 to 6 weeks.
Okay.
And we're in August of 2019 right now. So, but again, I don't have a crystal ball. Anything can happen, but this is the advice I'm giving my clients.
Cool. So I might be getting a call from you here.
Yeah, absolutely. And the other thing that I think is really important, if you're going to refinance right now, I'd love for you to reach out to me and I'd love to be able to help you. But if you didn't reach out to me, what I would do is make sure that you do not reset your term to 30 years. One of the things that I'm doing with my clients is if we're doing a refinance right now and you're 3 years, 5 years into your mortgage, we're refinancing you at a 25-year fixed, at a 26-year fixed, or a 27-year fixed. We're not just resetting it back to 30. So I kind of that rule in my business where I want to be able to save you money on your rate, but I also don't want you to go backwards on your term.
So I know the answer to this question, but maybe you can tell everybody, why don't you want to start with a 30-year again?
Yeah, I mean, you're starting the amortization schedule over again. You're paying more interest to the lender, and if you can, and even consider, depending on your short-term and your long-term financial goals, consider a 20-year. I mean, I have clients right now for the first time in my career really looking at 15-year mortgages, and I'm not a huge advocate of a 15-year because I'd like you to save that additional money and put it into the stock market or put it in your 401k or whatever. But I mean, a 15-year in the low 3s to high 2s, come on, man. That's
awesome.
Crazy.
That's crazy.
Yeah,
rates.
we took a client the other day that was at about 5.25, and we put them in a 15-year, and their mortgage payment hardly changed, but they just cut their term in half.
That's amazing.
Yeah.
It's going to save them a lot of money.
A lot of money over time.
That's awesome.
Yeah.
Cool. So Dan, you also did a video the other day on top 3 reasons that people are refinancing right now. Can you recap that for us and kind of tell us those reasons?
Yeah, we just discussed one, to lower your interest rate, which saves you money every single month. What I like to do in addition to that is to lower the term. So lower your rate, lower the term, taking you from a 30-year to maybe a 15 or a 20-year. Okay. The third reason, and I do a lot of annual mortgage reviews with every single one of my clients, if you're paying private mortgage insurance, I want to see that go away. So I think the trifecta, okay, it would be if you bought a home in the last couple of years and you put 5% down, and your home has gone up in value and you now have over 20% equity. The ideal refinance right now would be to refinance you to remove your private mortgage insurance, to lower your interest rate, and cut down your term. I mean, that's where you really start using your mortgage as a financial tool. So those are my 3 big reasons. Now, if I were to say 2 more, which we're seeing a lot of this right now, now is the time to consolidate high interest credit card debt, auto loans, because rates are so low. So doing a cash out refinance, I'll only do that if your mortgage rate with it being a cash out is lower than what you have right now. It only makes sense to do that. And then the last reason to refinance is to pull some money out of your equity. If you have a lot of equity, pull some money out of your equity to go either invest in the stock market or to get with this guy and invest in rental properties.
So Dan, one more final question for you. This is for the home buyers that are watching this. How are the rates right now impacting affordability for home buyers? What's the difference?
Listen, home buyers, and a big part of our business is working with first-time home buyers and move-up home buyers. I'm asking every single one of my home buyers right now, every single one of my pre-approved clients, if you were thinking of buying in the next 1 or 2 years, and we have a lot of people that reach out to me and they're just trying to put together the plan now. Look at the economy that we're in right now as a financial gift. Guys, 3 months ago, interest rates were at 5.25. 30-year fixed rates were at 5.25 3 months ago, and we're in the upper threes right now. So if you were just to compare buying 3 months ago at $500,000 and buying today at $500,000, it's a delta, it's a savings of almost apples to apples, almost $375 a month. What could you do? Yeah, $60,000, $70,000 in more purchasing power, or a savings of about $370 a month. So it's an incredible time to be in the market. It's an incredible time to look at that as what could you do with an extra $350 to $370 a month?
A lot.
Yeah.
Crazy.
So, crazy times.
Crazy times.
And it's not, they won't be here for long. I'm telling my clients right now, it's a gift. The economy, the market's giving you a gift. If you want to use it now, use it. But you'll look back 5-10 years from now and be like, doggone it, maybe we should have taken advantage of this opportunity if you can. So just look more closely at it. One of the things I love about Zach is that you sit down with your clients and you walk them through a buyer's consultation. And then in working with me, I know one of the reasons why you like to work with us is we'll sit down with you and take you through a mortgage planning meeting. Yep. And through that meeting, we go through the pros and the cons. We go through the financial aspects, both short term is 5 years, long term is 5 to 15 years. Okay, anything after that is really hard. I can't even look at my life 15 years from now, it's hard. So
10-year goals, that's fun.
Short term and long term, and then we tie in all the aspects of financial planning around that to make sure that, hey, this is a solid financial decision.
Yeah, it's education, it's value, super helpful. Yeah. Well, Dan, thank you for coming on. Yeah. I love doing videos with you.
Likewise.
I respect you a lot as a mortgage professional and love your advice. Take it personally. I'm super grateful that you're here to share that with everybody else too.
You got it, man.